Good morning, John. It's good to see you. This morning, John, we heard that Singtel's contemplating selling its investment in Optus, apparently to Brookfield for about $16 billion. Is that a sign that Australia is an attractive place for foreign investment at the moment?
What's a foreign investor selling to a foreign investor? That doesn't say too much about the mobile market when Optus, as owner, Singtel wants to vacate, but they have wanted to raise capital against that investment for quite a while, apparently, and it hasn't performed to expectations. Interesting, yesterday, Paul, that when there was a consumer survey regarding trusted brands, and Optus didn't fare too well on that consumer survey. So there are some issues. I think obviously for Optus, maybe the whole sector, I think Telstra's gained market share. Brookfield is obviously private equity, and be interesting to see who they would contemplate being a partner in that investment. And obviously Communications of Australia is a significant foreign investment issue. Now, you're going from a telephonic or communications company owner to a PE company, so that's quite a change. Be interesting to see how FIRB and the communications minister deals with that.
But it's quite interesting to look at Telstra and think about a company which has such a dominant position in the domestic market. And I was just looking at a price chart. 10 years ago, Telstra was trading over $5. Today, it trades at about, I think it's 280 or something like that.
380, yeah.
380. And it's trading on a PE of about 18, 19, a dividend yield of 4.6%. Is that, probably a lot of our viewers would have investments in Telstra. Is that somewhere where you'd be happy to have your money at the moment?
Well, I think Telstra suffers from my observation, it suffers from the fact that its service levels aren't really what you'd expect. Australia's communication network, the NBN and the mobile network, anyone in rural areas, and I do have a small farm up north, and it's appalling that the service levels, and you think, I've been up there 5 years and it hasn't changed at all. So I think Telstra and Optus both suffer from the fact that they will claim they're heavily investing in their networks, but the observation is not that they are. Now, if the marketplace and the consumer is not satisfied with the level of service and the network coverage, then they'll be constantly looking elsewhere. And then all of a sudden, when they start looking elsewhere, it's all about price, so we get this discounting going on. So until these major network owners start, expanding and improving their network, the price decay or the margin decay is going to continue. And the dissatisfaction levels with both Optus and Telstra, which are apparent from these surveys, will also continue, which means, they have to heavily invest in marketing to try and coerce customers. So they're creating their own problems, in my view, by not, a good service provider will attract the market, and I think both these major operators, and indeed all of them, suffer from this. They haven't, over a long period of time, built up the network to a satisfactory level.
But it does beg the question about the lack of, telecommunications and IT investment options in Australia. When one compares the composition of the major Wall Street indices in our own market, which is dominated by financials and resources, it really doesn't have much excitement going for it. Is that how you...
Well, Telstra's index decay, it was a major part of the index 25 years ago.
Yeah.
Got a bit of a boost in the internet bubble, for obscure reasons, but it has failed to maintain its rating because it's failed to grow its earnings against a market which has grown earnings. And, Telstra is suffering under its own weight of inactivity, I would argue. It was a highly trusted brand 25, 30 years ago. That trust has disappeared. It was the go-to service provider. I know the market's moved from fixed line to mobile, which has opened up the marketplace to various competitors. But Telstra had the unfair advantage of being the in-house offer, and then it had all these other offers in terms of pay TV offers where it could have bundled an internet. It missed that opportunity, and it's just now what I would call an average big company.
A high yield infrastructure stock.
Yeah, and it doesn't distinguish itself. It's tried. I know. The issue about complaints, I think, has gone away so much. But honestly, you give up complaining about the service levels and the black spots which appear everywhere. I travel up and down the Hume and Pacific highways, and it just astounds me. On our major motorways, we have black spots. And last year, I was travelling through the country in Thailand in secondary roads, and I didn't seem to lose my internet. But you lose your internet on major roads in Australia. It's a disgrace. It should be fixed. But I know I'm bleating a bit, but these are all the reasons why these telecommunication companies are their own worst enemies, and particularly in Australia. They just haven't invested in the network.
Yeah. John, as we've been saying for a long time, the single economic factor driving markets has been the decline in inflation, which the market is anticipating will result in the central banks cutting rates. US inflation numbers came out a couple of days ago. How did you read them?
Well, I put them on the slight side of disappointing. The momentum in inflation drop has stalled somewhat. Now you can't read too much into 2-month and 3-month numbers, but there was a bit of reversal. The energy compression, the lowering of energy prices reversed in February, and that was the major move. There's a couple of other outliers, but I'm just watching the gasoline prices of America, and wholesale gasoline prices have lurched up about 10% on where they were 6 weeks ago. And that seems to be factoring into energy prices and the cost of moving goods. So transport costs went up in the American CPI. So it's a bit of a watch and see. It does suggest that interest rate cuts, whilst they will occur this year, won't happen as quick. We've got Janet Yellen this morning making a comment that interest rates will not go back to the levels they were pre-COVID. Well, I don't think that's a great statement. They were too low. But I do think we'll see cash rates decline in America by towards 2% over the next year or two. Australia might be 1%, but that gets you back to about 3% cash rates. And if inflation is sitting around 2 to 2.5, that'll be fine. That'll be a more stable financial situation. So specifically, the inflation numbers, we have to watch in America that they're not coming down. They came down at such a great rate. Now it's going to be a grind down. We have to acknowledge that. When you come down from 8% to 3.5% in about 6 months, that's dramatic. But from now on, it's going to be quite slow.
John, one of the more important numbers that I think we both tend to watch on a daily basis is the iron ore price. And it was holding up around that 115 to 125 level for many months, and now it seems to have dropped below that to around 100. Is that obviously it's a reflection of slow growth in China, but is that going to have an impact on the budget?
The Treasurer's saying it will. I mean, he's giving a speech the next day or so and reported in the press. Now, the budget forecast for iron ore around $60 US a tonne, and they're sitting at 100, 105. What the mid-term budget update said in December was that the running price of iron ore at around $120 was well above that. So on forward estimates going out 4 years, which I always think is a little bit of telling fairy tales, but there was an upgrade in revenue of about $69 billion over 4 years, also including the increased size of the workforce. Now, he will claim now that the iron ore price is lower than what that mid-term forecast was suggesting, but I don't think the mid-term forecast over 4 years was saying the iron ore price was $110. So I also see that whilst unemployment has kicked up, Paul, the number of people employed has increased because we've got a bigger workforce. That suggests that tax collections will be up. I think there's a bit of double take going on with the Treasurer. He's always going to say it's hard to get a surplus. There's no doubt there is a surplus at present. He wants to spend that surplus going into a election year, and he needs to stimulate the economy. The economic stabilisers, and we all learnt this at school, this is basic economics. When the economy slows, the budget goes into deficit. It's called an economic stabiliser because it starts stimulating the economy. When the economy is booming, the budget, all things being equal, goes into surplus. And it's almost like a stabiliser to slow the economy by taking bigger tax collections. Now, what has happened in this slowdown, which is a income slowdown against inflation, is the government hasn't stepped in to stimulate the economy. Now, the tax cuts, which we know about, won't happen until July 1. So there's a delayed effect. And that's because the government is being very slow to react to the situation. But the iron ore price is an issue. We have a surplus. That surplus should be utilised to generate growth in the Australian economy, which it will be done because it's an election year coming up.
Yeah. Are you implying that they should be spending right now because the Australian economy is actually slowing quite rapidly, but they're holding off to do the pre-election boost? So either they have to bring the election forward or risk the Australian economy slowing to a standstill. Is that what you're saying?
Yeah, I think that's it. And it'll be interesting to see what the budget does, other than the stage 3 tax changes, which begin on July 1. It'll be interesting to see what they do in terms of stimulating growth, and if they have any intention to help drag down inflation through government charges. We're just waiting and seeing. If there are stimulation programs to the economy which are directed to the electorate, when the timetable is disclosed about those stimulation packages, that'll give you an insight into what they're thinking in terms of an election, which is obviously held before or by March 2025, but obviously can be called before Christmas, if that's the political will.
John, you joined us at our team investment team morning meeting the other day, and you were chatting about Woodside and some of the other Australian energy players. Do you have a concern that governance and political interference is creating some problems for some of the energy players in the Australian market? Is that something you'd like to share with us, your thoughts?
Well, it is an issue. We are seeing reports. We've had a AFR conference, Business Leaders Conference, and which included business leaders and industry funds and politicians, and there was a discussion around, activism, whether industry funds will become more active as they become bigger and bigger owners of the Australian market. I guess when you become a hundreds of billions of dollars industry fund, you have a fair amount of your investment indexed. There's an active element and there's an index element. The active element probably is where they strategically buy into companies, and the indexing is when they don't. And we are seeing influence come through, and I think it's more the indexes. I don't think industry funds are tactically buying heavily into gas companies or energy companies like Woodside. I think they're defaulting there through their indexing, and then they're popping up on the register with reasonable stakes. And then there's all of a sudden now saying, look, we think there should be governance changes regarding the future profile of capital investment by these companies, which should be more directed to green energy away from carbon-based. Now, that's fine. There is the government of Australia, consistent with the world governments in terms of what world policy is across the Western world and in developing clean energy, they will create the law, and the Australian companies will operate inside that direction on how they invest in the future. But when you're getting snapped at by industry funds who are claiming that they have some mandate from their investors or their union movement to force change at a board level, to cut across direction policy of government, I think we're getting into very dangerous territory. These companies are investing, have to invest, have to replenish their revenue lines. They're charged with that. Now, I'm not saying investors don't have a right to air their views with companies, but I think it's got to be very, in this area of energy, it's got to be a little bit more sensible and shouldn't be reactive and shouldn't become politicised. Australia has done a very poor job at supplying itself with energy at a good price. We're good at exporting energy, but very bad at creating our own energy. And we actually have to form some proper policies at a government level. I don't think at a shareholder activism level is going to be very helpful, frankly. And if that confuses companies in terms of their capital investment profile, which then diminishes their return on equity, it's a cautionary note for all of us.
Yeah, you referenced green energy and you referenced clean energy. Maybe I'm putting you on the spot, but do you have a view on hydrogen option that Andrew Forrest talks about? He's a bit of a crusader. What are your thoughts?
He's a crusader, and I'm sure he's talking his own economic case. And I listened intently for his press club, and I encourage everyone to listen to it because I just didn't get much out of it. It was an hour of talking about everything in the energy market without actually putting any meat on the bone. And I think there's a lot of options for Australia, a lot of options because of our resources and our environment and our sunshine and our wind. There's a lot of resources and our uranium. Australia should be attacking the energy issues from a whole range of different directions with different timetables, and focusing on our comparative advantage and hopefully turning some of those comparative advantages into future export revenue. You look at solar and batteries. I mean, if we can't get it right in Australia, how can we actually go from servicing our own needs into servicing the needs of our trading partners and the region, which is a high population region? So, I only wish that the guys who seem to know what they're talking about got around the table and can conclude on a strategy for Australia's energy needs. I have no doubt the world's going to go to zero carbon, net zero. And that's the important thing, net zero. There still will be carbon produced, but the offsets will be significant. I don't think there's any doubt we're going there. And Australia just has to work inside that and work out how to do it. But as we all know, unless you want government doing it 100%, you've got to have a profit motive. And there's nothing wrong with a profit motive because all of us are investing our capital for a superannuation and we want a return on it. That return will be to our benefit in retirement.
Yeah, good words to end on. And just a reminder that, Australia is still the world's either second or third largest natural gas exporter. I mean, after I think the United States has leaped over Qatar. But we're a world-beating energy exporter, and yet we've made such a mess of it domestically. Anyway, John, thank you very much. Always an interesting discussion. And for our investors out there, have a good weekend, and we'll see you next week.
See you then.